Hi everyone, welcome to my channel. I'm Doris. I'm here to share with you about my stock account. The US stocks fell for the third straight month and watching the Fed's November meeting. The US stocks closed higher on Tuesday, but they posted losses in October overall, and the market has been waiting for the Federal Reserve's monetary policy meeting on Tuesday, and its results that's going to be announced on Wednesday by the Fed President Jerome Powell. All three indexes fell for October. The Dow fell 1.36%, S&P 500 fell 2.2%, and recording their first consecutive 3-month decline since March 2020. Nasdaq fell 2.78%, also marking its third straight month of decline. The market continues to watch for the dynamics of the U.S. Treasury yields. On Tuesday, the benchmark Treasury yields rose 3.4 basis points to 4.911. The yield rose by more than 35 basis points in October. The Treasury Department said Monday it expects to borrow $776 billion in the fourth quarter, down from a previous estimate of $852 billion, and below Wall Street expectations. The Fed officials said the reduced figure was due to higher revenue expectations, mainly because taxes in California and other states previously delayed due to natural disasters now flow into the Treasury. The Wall Street's optimistic outlook for the U.S. earnings growth in the coming quarters need to be revised downward as the impact of monetary policy tightening on the business community, and then the stricter interest rate environment and tighter liquidity and increased geopolitical risks have even lowered the risk of consumer demand and weaker corporate pricing power. The Federal Reserve began its two-day monetary policy meeting on Tuesday and announced its results on Wednesday. Federal funds futures suggest that the probability that the Fed will keep the current monetary policy range unchanged as high as 98%, according to the CE Fed Watch tool. On the economic side, the Employment Cost Index, a broad measure of wages and benefits, rose 1.1% between July and September, up from the 1% increase in the second quarter. While the wage growth in the private sector accelerated slightly, wages in the state and local government sectors rose rapidly. Compared with a year earlier, the Employment Cost Index rose 4.3%, the smallest annual increase since late 2021. The Employment Cost Index accelerated unexpectedly in the third quarter today, adding the concern that a strong labor market could keep inflation consistently above the Fed's target. This is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.